Hey, so a big question I get asked is how do Mega Backdoor Roth conversions work? If you're looking for a way to supercharge your retirement savings, you get more money into that Roth bucket, which is the best bucket you can have. The Mega Backdoor Roth conversion inside of your 401k plan is a very good strategy to look at. It's a strategy for high income earners. It's a big game changer. People who are seriously trying to save a significant amount tax free for their future retirement and their future use. So I'm going to walk through a breakdown of how that works. So the Mega Backdoor Roth conversion to retirement saving strategy allows you to contribute more to a Roth 401k than the standard limits. So for example, IRAs, let's say IRA contributions, either Roth IRA or backdoor Roth, the limit is 7,000. If you're under 50, if you're over with a catch up, it is 8,000. Now, if you're contributing to the Roth 401k through salary deferral, let's say your 401k plan offers a Roth salary deferral option, which most do. I'm going to include a link below. It's some interesting 401k facts on the percent of plans that do include that and don't. But the Roth salary deferral maximum you can make is 23,500. But with that Mega Backdoor Roth, you could potentially contribute even more than that. It all just depends on your 401k plan. So we're going to walk through a breakdown of how that'll work and key considerations to make. Okay, so we're going to walk through how these work. So the first key points to consider here is 401k plan must allow for after-tax contributions. This is not always a feature in every plan. It's typically more common in larger corporations 401k plans and potentially solo 401k plans based on your administrator. It also must allow for in-plan Roth conversions. You need both of those to be included in the plan to be able to implement the strategy. So we'll walk through. So first, let's say you've maxed out your salary deferral. You've done a Roth salary deferral, 23,500. That was your contribution. Okay, and you get your employer contribution. Let's say you get $10,000 in a match, or you get $10,000 in profit sharing, any sort of employer contribution that goes into the account. So now you've contributed 33,500. Then you have the max, right? So that max is 70,000 you can contribute for the year. So that leaves you 36,500 to reach that 70,000 max. So what you can do is, if your plan allows it, contribute the money after tax and immediately do a conversion from that after-tax money to the Roth bucket. What that allows is you to have tax-free growth on the Roth, and that growth on that tax-free money is the full 36,500 and the 23,500. The key considerations is this can be a very complicated process, so it's important to have a good team in place, a CPA, an advisor, someone to walk through the plan, make sure it's executed properly, especially coordinating with the third-party administrator on the plan. But if it can be executed, then that is a very large amount moved into the Roth. I will point out too, if you're over 50, it just allows for an additional 7,500 catch-up contribution, so you could contribute up to 77,500. So really the results are doing this. If you were under 50, you get $60,000 in a Roth bucket, and let's just say you only contribute that 60,000. You don't put any more money into it. If that averages 7% year over year for 20 years, that's 233 or 32,000 in a tax-free bucket for retirement income. That's why this is huge, especially for high income earners. If you have a significant amount of income, you have the cash available to contribute after tax, you're likely not able to fund a Roth IRA. And the goal is to get as much money into tax-free accounts as possible in retirement, because it allows you to not be affected by potential tax increases in the future, allows you to stay in the lowest tax bracket in retirement as possible. So you want to try to contribute to all the possible accounts you can. Again, just as a recap, the key considerations: not every plan allows it, so make sure you check if your 401k plan has this in the plan documents. Remember, you want to convert those after-tax contributions as soon as possible, as contribute and convert as quickly as you can, and you want to make sure that it is very complex, so you have all the documents in order. This strategy is really good for people who've maxed out their 401k contributions and have additional income to contribute. They're typically high income earners, have additional they want to save for retirement, or business owners. If you have a solo 401k, you can build out the plan to have this as a feature. You want to build that tax-free growth towards retirement in that Roth bucket. It's the backdoor Roth. Mega Backdoor Roth is one of the most effective ways to really maximize tax-free retirement savings, especially if you're a high income earner. If you're curious whether this is the right fit for you and you want to review your 401k plan further, there's going to be a link below. Just feel free to reach out, schedule an initial consultation. I'm happy to look at it with you. If you want to learn more about 401ks, I've linked a blog here. I've also linked a link to a free 401k guide, just to make sure you have a plan in place to maximize your contributions and you're doing all the right things. Feel free to like and subscribe as well. And if you have any questions, you can comment and I will reply to all of the comments. Thank you.